Coca-Cola plans to invest $1 billion in Nigeria over the next 5 years, just to expand operations and support local growth. This investment is expected to boost job creation and enhance production through the company, though the company must navigate challenges like inflation and currency volatility. Meanwhile, Ecobank has secured bondholder approval to amend key terms to strengthen its capital adequacy. This move will improve the bank's financial position, but comes with the challenge of remaining competitive in Africa's dynamic banking sector. Additionally, we're seeing that Nigeria's foreign reserves have grown by $2.35 billion monthly, a positive sign, though inflation and currency concerns remains key issues. Joining us for this is Folagbade Adeyemi, who is the MD CEO of Splitar Limited.
Thank you for joining us today, sir.
Thank you for having me, everyone. Cheers.
Interesting, right. But recall that Coca-Cola made the same promise in 2021. I mean, do you see any significant change in the business climate that sort of suggests that this is a good time for it to fulfill this particular pledge?
I think context that, and the question is very, very good one. Truth be told, it's the previous promise to invest the same amount of money was under different context. I think in this situation, it really is the best time to be looking to inject the funds. However, one needs to also look at the fact that the company itself has put some, I won't say stringent conditions, but conditions that would require the government to be very conscious of before that promise materializes. And what they basically requested for is a stable economy that is able to provide them the basis for growth. And ultimately, this funding would be significant enough for them to help them navigate the challenges that you've highlighted, Frank has also highlighted, in the form of cost push inflation, supply shocks, because truly the country itself has really faced quite a bit of challenges, especially with the fact that petrol and energy costs have gone through the roof. I believe, in my own opinion, that this capital injection is going to probably be used to navigate those cost challenges, to make sure that they optimize their infrastructure and also the supply chain network to ensure that it is fully optimized. Because I believe the major costs that they will be battling with now and going forward will be in the form of energy costs, supply chain issues on the back of these things. But ultimately, it's a good time, considering their competition is also going to be facing these challenges. And maybe it's just time the business is able to use its current status as an international brand to then use this 1 billion to grow its capacity in the face of a stronger competitive environment, and ultimately gain market share on the back of others who have a weaker position. So I think it's a really good time, but one also needs to be very careful and conscious of the fact that it comes with those conditions around a stable economy and an enabling environment. Nigeria has a great population, and ultimately that would drive demand and ultimately production. Coca-Cola would obviously always sell in this market, but ultimately I do believe that job creation would come in the form of being able to provide a stronger supply chain network, and that's where the real opportunity is for anyone that wants to be an off-taker of this capital injection. So yeah, I think it's a really good time, and we should probably expect this infusion to happen, given the conditions are met. Yes.
We have a very complex economy in Nigeria, and as Coca-Cola expands its operation and its investment in Nigeria, how do you think this could influence competition in the beverage industry, and what opportunities might this create for local suppliers and MSMEs?
So ultimately, let's also be very clear that Coca-Cola has competition. There's PepsiCo, there's Rights Food that is ultimately the producer of the competitive brand, which is in the form of Biggie. All these products are somewhat defensive in nature because, yes, prices may go up, but I don't believe that we would see significant trail-offs. So the opportunity does exist for Coca-Cola to actually gain market share where others may be struggling to find additional capital in this current environment. So it would probably use the funding to, again, gain that capital share. Now, for the opportunities for MSMEs and distributions and people in that sphere, I do believe that that space, whoever plays within that supply chain would ultimately be who can help them optimize their costs in terms of efficiency, would probably be the best off-taker of this kind of situation. Distributors, I think things may just ultimately be flat, ultimately because retailers are going to be suffering on the back of lower income from everybody's purse. Like the micro economy is really feeling it on the back of stronger purchasing power. But like I said, MSMEs who focus on supply chain optimization for these type of bigger industries would be better benefactors of this.
Let me throw this in now. I mean, isn't it ironic that at this point where Coca-Cola is talking about $1 billion investment, we have PZ Cussons saying it wants to sell its subsidiaries, whether partially or fully. What do you make of this?
So it's like I said, even the PZ having to exit is not a strange thing, because truly all the international brands will be seen in a situation whereby their international reparations at the end of each year, their bottom line is really feeling the impacts of FX. Coca-Cola looking to bring in and infuse this, again, might just be a strategic play, given that the economy remains stable, given that FX remains stable. And I think that's the underlying condition that we all must pay attention to. They're not saying that the investment is going to come without any conditions. It just must be there. But PZ at this point has already elected to exit. They've seen the trajectory, and ultimately probably they can't. The capital base can't take it from an international standpoint, and thus the need for exit. Note earlier that they had elected to delist from the Nigerian Stock Exchange at 23 naira, and they couldn't. So ultimately, the sale is just for them to exit, find another exit window. So it's a business, and you just have to look at what works for you and what doesn't.
Absolutely. Emotions don't cut it here. So for Ecobank, it's recently obtained approval from bondholders to amend key terms so it can, boost its capital adequacy. What does this mean for the bank and even the bondholders alike?
So ultimately, I don't believe the bondholders should have any concerns, but the bank itself has made this adjustment just because it has to, in my own opinion. If you look at what a bank does effectively, a bank is basically just financial intermediation. You raise capital, you gather deposits, and ultimately lend to people that require funding and financing. Now, Ecobank itself had made the strategic move to ramp up or look at raising its risk asset portfolio, which is basically loans in the form of USD. And the truth is, if you have a situation whereby you had about a $300 million or $1 billion loan portfolio last year, and looking at that, what that is worth in Naira this year, it significantly changes the conversation. The FX depreciation has impacted them. And the truth is, when loans go bad, what typically happens with banks is that those loans impact your capital. So because the value of these loans have significantly grown in their balance sheets, they have no choice really but to raise additional capital for them to be able to withstand any shocks on their risk assets. So this, if you ask me, this adjustment is very timely. It is something I expect that the industry will ultimately see more of. People like Standard Chartered, and people that really, and Citibank, and people that really focus on those sides of the economy, the international economy, will have to make this additional changes. Some people are raising capital already in the form of IPOs. I don't want to name names, but you're well aware of that. And all this is on the back of the need to do so. So once Ecobank does this amendment in terms of their capital adequacy, it means they're better positioned to raise additional capital. Because right now, what the parent company itself has done is that it's committed to inject additional capital into the business. They are also going to issue additional bonds to raise their capital to, again, withstand shocks. And ultimately, what that does for the bank is that it positions it for better business going forward. And ultimately, they will even
let's shift gears a bit. Let's shift gears a bit and tilt towards foreign reserves. Nigeria now records a monthly net inflow of $2.35 billion. into its foreign reserves. What key factors are driving this position and this positive inflow? And how might this impact Nigeria's foreign exchange stability and economic policies?
So this is great news to hear for everybody, and I'm sure even you, Frank, and Pepetra, it's great news to actually hear. It's really on the back of growing international production, but more importantly, Nigeria itself has been growing its daily production in terms of 1.365 per day, if I'm correct. Now, what that basically means is that we're generating and exporting more. And ultimately, on the back of FX depreciation, what that implies for us is that imports become more expensive. And as you generate more and sell more in the international stage and you reduce your imports, ultimately what happens is that your reserve starts growing. I need to just mention this fact that we have a high NPR rate already, and the fact that even the US Fed cut, the recent US Fed cut, implies that we potentially will see more foreign portfolio investments coming into Nigeria. This means we are positioned better for additional shocks in the future. I think it's a really great, everything is working together in our favor in this case. And I believe if things hold steady, if everything is maintained, or like they say in economics, all things being equal, we should have a continued positive trend on this end. This definitely is great news to hear. And I don't believe it is going to be the last of it. Hopefully we'll get more of it.
All right, thank you so much for Folagbade Adeyemi, MD Splitar Limited. Let's hope it's not all debt anyway at the end of the day. Thank you so much for your time on the show.
Thank you for having me, guys.